everyone, Kim here with the Traders Club. Welcome to the market update. Today is April 14th, 2017, Friday. Market is closed today due to Good Friday. And let's see what happened in the market this week here. Just kind of going back to what I was saying last week. What I was saying last week was that I thought that this was a good level of support, and what I said was last week was as long as we hold sideways, that it gave more favors to the buyers. And then I also talked about that if we do break to the downside on this support, that you will see this thing coming down in the intraday, and then buyers stepping in and bring it right back up. And that's what this day was. And you know what, Keith? I was looking at this, and then there was a point where I thought to myself, well, it's too easy, right? Because someone's like, I knew this was going to happen. It's interesting. The market is a fascinating place. As soon as you start thinking it's too easy, it knows how to humble you. It's not that I tweeted out that, oh my God, it's too easy. I called it. I told you so. It's exactly what's going to happen. I didn't say it to my members. I didn't tell my friends. It just was thinking on my own. And in my own heart, I'm like, oh my gosh. Like, I knew exactly that was going to happen. And I was pretty certain that on this day, right, this was 11th, that we're going to see a follow through and potentially get back above 236.25. And I think after this day, I think a lot of people thought pretty much maybe leaning towards the same way. And this market always knows how to fool the majority. And this market always know the proud heart and know how to humble them. And next day, we didn't see a follow through, and then the plunge yesterday. So, and obviously, this wasn't something that I anticipated it, but still we do have this level that I was looking at. This level is broken now, this uptrend support that we've been talking about for quite some time here. So you can see, I think this was a day that it kind of, it dodged being submerged below this support, and it had this head up above the water trying to grasp for air, and then it finally lost it next day and yesterday. So that support's broken, but there are other support levels that I'm still looking at. This is what I call rising pivot, right? This is a prior resistance here and here, and that became a new support, right? So this were just right, we've stopped right at that level. Again, this was a first level of FRZ, 38.2% retracement zone. I tweeted out 2 days ago that this was a level to watch, and then we broke that first level of Fib, and the second level of FRZ is this one. FRZ is a Fibonacci retracement zone. It's not an official term, I made that up. So the FRZ is basically what I'm saying with the FRZ is as long as we stay in this region, in the vicinity of this FRZ, it is considered still in a bullish in the primary to intermediate term. If we do bounce in any of this vicinity, it can be categorized as intermediate to primary term higher low before resuming back up. And I'm still leaning towards that scenario despite the move yesterday. Again, when things bake and shake, it's always good to kind of go back and see where we come from, how this market reacts. So how many times do you think, because when market starts to pull back like that, there's always somewhere, somebody shouting top of their lungs that the whole thing is going to crash, right? So now I think if you're a prudent investor, prudent trader at this point, you think that that's stupid, because how many people thought that was going to happen here and here and here, and even when we're consolidating here, that a lot of these crash theorists that they can't possibly go any higher after this kind of move, and he did, right? So when we kind of pull out and look at this trend, we can understand that we're still in this primary term uptrend. Market pulls back. It's normal thing. I want you to tell yourself you're just freaking out at this point. And obviously, if you're a day trader, short-term trader, I guess, you know, a lot of people stops getting taken out. People are just freaking out. They just, you know what I mean? It's like, how low can it go? But I think a lot of you who is viewing this video, I think a lot of you have been following me long enough, and I think a lot of you are pursuing that longer term trading style, or you guys are already, or you guys are active investors like myself and position traders, which we hold things much longer term. This isn't a much deal. Though I like to see some maybe 3% correction so far. I would like to see some you know, move to the upside after that huge hammer candle we saw a few days ago. But you know, this market is never going to give you what you want. Sometimes it does give you exactly what you want, but sometimes it knows when you think this market is too easy to predict, it's going to do something to change that, right? So let's look at this objective way. We're still in a primary term uptrend. I will still say that we're bullish sentiment in the primary term, intermediate term, but we're in a bearish sentiment in the minor term, as we have minor term downtrend, but we have an intermediate term uptrend. Does that make sense now? Okay, so the level to watch going into next week is this rising pivot, right? So this is a level. If we do hold this level, I think we might see some kind of a slowdown here. But the question is, even if we bounce up here, there's a good chance that this could continue lower in that perspective, since we do have that falling resistance. If buyers really want to, you know, turn this thing around, we need to get above 236.25 for the minor term sentiment to be back bullish, right? So that's kind of what I'm looking at here. We did break below 38.2%. We're right at this rising pivot level now. If we do break below that rising pivot, we do have that prior support, which is coinciding with the 50% retracement. Here's the scenario I'm going to give you. I think the worst case scenario for this market for April, possibly in early May, is I think 229. I don't believe this thing is gonna go below 229, and I'm calling it. Again, this, you know, I think this is a level that we have the last level of fib at 229, and this is last level of FRZ, and this is a level of, we have that gap here is still open, hasn't filled, and that's the same vicinity that we seen the 100 SMA residing. So I think you wanna talk about next big support. I think this is a level that we're gonna see a big support, 229-ish level. I don't see this thing going any lower than that. I mean, it may kind of come down a little lower, maybe even, you know. But I think okay, let's say a little bit safer here. It may fizzle around. I think the worst case it will be 220. Let's call it 228 to 229 because we do have a gap here. But I don't believe this thing coming down any lower than in this region here. Worst case scenario. I mean, again, we can still find balance here, but I know I'm getting a little bit too ahead of myself, but I just want to state that. And then we'll look at these levels. I won't change any of this, my chart here. So we'll look at it on a weekly basis and we'll talk about it. But again, this week is level is that rising pivot. And then if we do lose that rising pivot, it's a 50% retracement. I think those are the levels to watch here. I want to quickly though look at the daily chart of S&P 500 here. Mainly I do want to look at, actually let's just look at the whole thing. You can see here looking at this daily chart, let me get rid of MACD. MACD is actually kind of irrelevant at this point. What I want to really look at is the stochastic and RSI, right? RSI is getting close to oversold zone, but we're not quite there yet. You see that? That's the oversold zone where we found support. We found support there. Boom, right? We found support on the Brexit and then this election, right? So we're not quite there yet. There's a little bit more room to move to the downside. That tells me there's a chance that this could come down a little more. Either it may bounce a little bit and then come down, but I think RSI is going to be a key indicator going into this week and next week. Another thing to watch out for is this is what I call potentially bullish divergence on stochastic. So you can see we got this right there. We got the low, lower low, low, higher low. I talked about this back in early February. If you go back to my YouTube channel, the reasons why. I forgot the title. Why the stocks will be rising, why the stocks will be moving higher, something like that. This was a February 2016. This was when we had bullish divergence on stochastic, RSI, and MACD. Okay, lower low on the price action, higher low on these indicators. You can see that now price action on this line chart, we start to come down. And if it does come down lower, you see where the stochastic is. So what's going to happen is, let's say if stochastic comes down and then bounce, and if we see low, higher low, and then lower low on the price action, we could see that bounce, pretty strong bounce on the stochastic bullish divergence. Again, it hasn't played out yet. We'll continue to monitor this next several weeks here. Let's continue on here with the Russell 2000. I'm still holding my calls here. As of today, we are still having a hard time to break above this rising support. We are still, I know my last journal update, I talked about this inverted head and shoulders. It hasn't completely been nullified yet. Let's just say if we do bounce from here, let's just say, I'm not saying it's going to, let's say we bounce, that can still be categorized as that inverted head and shoulders. You can see a lot of people are talking about the head and shoulder formation. There's a video on YouTube, video lesson either on YouTube, on my blog. You can go to the deception of head and shoulder formation and the video lesson on head and shoulder formation itself, where I talk about how to look for confirmation. I don't want to go into it right now. So a lot of people are looking at this head and shoulder formation on the Russell 2000 and the financial sector. Well, you need a full confirmation on that. I talked about it on that video lesson, on the head and shoulder formation video lesson. Also talked about the deception of head and shoulder formation, especially when we are in this raging bull market. It is likely to see a lot of, like these formation and patterns will trap the bears and these cynical, passive, fearful traders. And then it just does something unthinkable, or something does opposite. So I think that's kind of what I'm looking at. I'm calling it a bluff, where it looks like we're forming this head and shoulder formation. Again, I'm not going to sit here and give you these scenarios where, if it goes higher, 137.96, it's going to go higher. Well, if it goes below 132, it's going to go lower. Anybody can do that, right? How many quote-unquote experts will give you that every single videos? I'm going to tell you what I think, because as a trader, guys, you have to make a decision. I'm already long in this position. So the question is, what is your call? Are you going to hold your positions, or are you going to get out of fear? See, that is the question everybody should be asking every single day. Yeah, we listen to these so-called experts. They'll tell you, well, it is a range bound, so if it's above 137.96, it can go higher. If it's below 132, it can go low. That doesn't help anybody, either if you're short on this already or if you're long on this already. The biggest question is, when you get into a position, you're going to run into trouble in this market. That's why this market is fascinating. You see, everybody wants to look for a perfect scenario. You go long and then everything is good at dandy, right? Everything's sunshining, there's flowers everywhere, butterflies flying, you're just dancing around like these cartoon characters in these butterflies and things. You guys know what I'm talking about? But the market isn't like that. That is a fairy tale. The market is a trouble all the time. That's what makes this market unique and fascinating place. So question is, I am still holding my call position that I have accumulated here. As you guys know, if you've been following my journal post, which I will continue to do that. So I am calling it a bluff. And I am still holding my positions. I will continue to be holding my position even if it comes down to 132.09. I don't believe this thing going any lower. That's what I'm thinking. I think it's this thing, if it does come down, we're going to find some buyers in that vicinity. If we fill gap, I may buy a little bit more here. Obviously, I still have my time on my leaps. But let's see how it plays out at 133.85. We just talked about, this video is going to be much longer than I anticipated. This bullish divergence here, we're possibly forming that potentially. Is not sure 100%, but we have already been forming. This is a daily chart here, something of that nature. Remember, Russell 2000 kind of bounced here, right there, bullish divergence there. That's also the key, was why February. In February, we had bullish divergence on every single indices. This is the reason why I was able to accumulate a long position, or holding my long position, not closing out of fear of the market was going to crash. back in February 2016. And it's easy to say that now. You say, go back to my blogs, go back to my YouTube videos, see what I was saying back in February. Then you know what I meant. Anyway, so what I mean, go back to here. So we are obviously in a minor term downtrend, lower highs, lower lows, and we are just kind of dangling in that vicinity of 133.85. Let's see what happens next. We're here. Let's go to NASDAQ. You know what? Let's skip this. I don't have much time. Financial sector quickly. I'm still thinking that this potentially be a bluff. I'm not. It's tough to say. You want to see this thing actually playing out. If you're calling this head and shoulder formation to this thing coming down to 20, I'm actually thinking they may not. There's a head and shoulder formation here quickly on the financial sector right there. Look at this chart. If this was today, what would you say to me? If this was today, what would you say to me? Right there, right? So we got the left shoulder head, right shoulder. This was a neckline right there. Looks like we're breaking neckline. Lower highs, lower lows, right? We got this 20 MA acting as resistance. We're declining now, and looks like this thing is set up, or you could call it a right, for much lower position. Look at this here. This thing looks like a little head fake, possibly going much lower. This might be some kind of a, some kind of a correctional move on this more gigantic popping pattern, right? That's what it appeared, and that head and shoulder formation that potentially be that, and then things changed very quickly. We fizzled, and then parabolic went, right? I think because a lot of people are looking at that as a potential head and shoulder formation. A lot of people are looking at that this are falling lower, and then unthinkable happen, right? I'm not saying that's what's going to happen here in the banks. What I'm saying is, if the sellers were going to crash the banks, they should have done it here. So I think most people they're not probably, maybe many prudent, smart investors and traders, probably they're not looking for a crash here. They may be looking for this thing coming down to retest at 200 SMA. It might be possible. But let's see. Let me throw head and shoulder. The gap right here. Pretty similar gap. Looks with the Russell or IWM ETF. So I think this is a level to watch. This is gonna be an important level. If we do see a bounce here, a lot of times when you see a head and shoulder formation like this, what it could do is it could throw a lower low and then do inverted head and shoulder and then reverse. There's a good example for that is here. I still remember. There's a good example right here. How many people do you think calling for massive head and shoulder correction here, right? This thing, look at this thing rally. This was after 2009 crash. We have a just humongous fear looming in the entire financial markets. We're talking globally. After 2009 crash, 2008 crash, we haven't even begun to reach all-time high yet. We're just right in the middle, maybe even 50%, right? And retracement from the lows, and the highs at the top right there, right? This is where there's so much fear looming, and then we had this fast up move, right? Very fast up move, and then we threw a head and shoulder formation, right? Left shoulder head, right shoulder, neckline, and the neckline is also an issue. What do you feel at this point? Everybody's looking at this head and shoulder formation that this is going to. I've heard analysts coming on TV saying that S&P 500 is going 600, S&P 500 ETF going to 60. I swear, I wish I saved that track or the video. I remember somebody's coming and saying that this is going to, like, here. This is gonna be a lower low thing where this is going to 60, right? It's a fear looming. And then what happened was we got the new low right there, and then got up. What happened? We threw that inverted head and shoulder, left shoulder head, right shoulder, and then market reversed, and that was the pivotal level. And then this thing, we did see a correction in 2011, but that's when we went up and continue went up, and we're here, right? So that's a scenario. I'm not saying that that's what's going to happen, but I'm feeling that something like that is likely. This market still is in a bull market. We have the head and shoulder formation on the financial sector and the Russell 2000, but not on the Spider, not on the Dow Jones, not on NASDAQ, not on semiconductor. We're just pulling back. And because of that reasons, I think that might be a scenario that's playing out. So, I mean, if you're heavily short on this or thinking that this is coming, what I would rather do is, instead of shorting a bull market, is wait for some kind of a reversal pattern and then start buying, even buying the dip. I mean, if you want to be more safe about it, is wait until the inverted head and shoulder confirms. Or, you know, what else you can do is can just kind of hang around here, consolidate, and then start to move back up to the upside. I'm going to quickly look at silver and gold. I'm going to let you guys go here. We did see some constructive move on silver recently, but we still need much more. We did kind of slightly breaking above the the primary term downtrend resistance. We are breaking above this neckline here, just a few days, but again, it's not enough. Few days is not enough. This thing needs to get above 1785 and start to do something like that. Let's say that's what it is. I may thinking about going long here. I don't like going long on a breakout, because how many times you see head fakes and shenanigans, right? But some constructive move here early. Let's go to gold GLD. GLD also pretty constructive move, but we are just bound by, we are just hitting that long-term downtrend resistance that comes from way at the top. We're just right there. You see here, we're just right there today. You see that? So that, again, if we get above there on Monday, you say, aha, that's a breakout. No, it could get up here a little bit, and then if it just falls, it's going to look pretty ugly. So I really want this, get above 124.62, maybe even come here to resistance, and a pullback and a breakout either here or here would have been very, very good entry for long-term trading, right? Long-term, maybe even active investing. GDX is still bound by this long-term downtrend there, which we've been talking about for quite some time. You can see right there, we haven't broken above that yet, but we did broke above this recent downtrend resistance right here. You can see, but again, that inverted head and shoulder is not confirmed. That's the neckline above 25.51. Even if we break above that, we have that downtrend coming up. I won't be excited until this thing possibly getting above 28.69 and then start to establish and cultivate these high lows and higher highs. Have a great weekend. I'll talk to you next week.